Good morning, guys. It is Tuesday, December 10th. Let's go ahead and get into our NASDAQ top-down analysis. So starting here on the weekly, I have marked out our previous week high, previous week low, and 50%. These will all be key levels for this week. Moving into the daily, what I'm seeing here is we are still in Monday's range, so definitely be cautious of that. And then moving into the 4-hour, so what I like to analyze is where price is coming from. So if we zoom out and look left, we can see that price is coming from this imbalance down here. So price came from these previous all-time highs, retraced into this imbalance here, held 50%, retraced back up into this imbalance here, and then we came back down, filled this one, and then we pushed back up, took out our previous all-time highs, created new all-time highs, and now we are making a minor pullback. So potential scenarios for today, if we drop into the 1 hour, you can see we did create this little imbalance here. We already did come back up into it and test it, and then retraced a little. So I'm mainly looking at this as an inverted fair value gap. So scenario 1 would be a break and retest of 50% here, and we would target previous highs as well as previous week high and all-time high. So all of these scenarios are longs, guys. I'm not looking for any shorts. So with that being said, I would just set an alert there for that break and retest for long there. Second scenario would be a retracement into any of these levels. So mainly 50% of this daily fair value gap, previous all-time highs, 50% of last week's range, or this imbalance down here. So why I am looking for those levels is if we take my fib and put it at this recent swing low to all-time highs, we do get several confluences on these fair value gaps with the fibs. So confluence would be 62% around previous all-time highs, as well as the bottom of this imbalance, and then our stops would be below previous lows. So that is scenario 2 would be this area here, and then scenario 3 would be this level here, so around 21,303 to this 50% of last week's range, as well as 705 on our fib, and then our stop loss would be below our previous lows down here. If you want to play 50% of this fair value gap, you can, but I'm fine with waiting until we get down here, just because it's higher probability. Of course, if we get down here and we're getting wicks or bullish structure on the smaller time frames, then I'll probably look at it more closely. But just speaking now, I'm mainly looking for 50% here, these levels here, and then this 303.5 level approximately. Okay, so let's just drop into the 1 hour to analyze a little bit. So like I said, we did come back up and test this fair value gap. So we came down. I'm mainly looking at this here as a double bottom rather than a liquidity sweep. I would have liked to see price after coming back up into here either definitely sweep these lows down here, which we didn't get. So that's mainly why I'm treating this as that inverted fair value gap. So that's pretty much it today, guys. A little bit longer than normal, but I think it's good context. So I hope you guys have a good day, and I will catch you in the next one.